What's up guys, and welcome to our first ever exclusive technical analysis lesson. In these lessons guys, we're going to be breaking technical analysis, and I'm going to be teaching you guys step by step how to interpolate technical analysis into your everyday investing and everyday trading. Now these lessons are going to be going down on a weekly basis, but however, if you're accessing these videos through our archive, then you can obviously binge watch them and watch them all in a couple of days. Or I mean, it's a lot of content for a couple of days, but if you can just absorb it and you're a super sponge, then you can do so, right? So without further ado, let's get our first started on technical analysis. I just realized that I said let's get the first started, which didn't make any sense, but I meant let's get our first lesson started. Okay, so what is our first lesson, guys? Our first lesson is going to be candlesticks, right? We're going to be talking about what candlesticks are, why are they so important, and why are they so much better to have as your chart settings than actual lines when it comes to technical analysis, right? But before we get to that, guys, what is technical analysis? Well, guys, technical analysis, simply put, is chart reading, right? And being able to predict future outcomes based on previous performance of a stock, technically, aka from its charts. So when it comes to putting this into work, right, predicting the future based on previous outcomes, we need to maximize the information we have on previous performances, right? We need to maximize the amount of data and amount of information we have on what previously happened, aka the history of the stock, right, in order to be able to more accurately predict what is going to happen in the future. And this is exactly where candlesticks come to play, right? Because instead of just showing up, down, up, down, up, down, candlesticks show us more specifically where a stock opened, where it went, and then where it went back up to, and then where it closed, right? So a candlestick, unlike a line, right? Unlike a line, charts gives us three more pieces of information than just the one single information of up or down. Three more pieces of information? What are you talking about, Money Talk? Okay, so in a line chart, all we simply see in a 5-minute period, in a 5-minute line chart, is where it closed, right? What was the closing price at the end of the 5 minutes, right? For example, over here, the closing price was at this level. That's why over here we got a dot, right? Where it kind of just, the line ended and then another line started and then another line ended, right? But however, when it comes to a candlestick, we get way more than just the closing price. We get the open price, we get to see where the high was, we get to see where the low was, and then we get to see where the close was, right? And this is the information that we can use, and this is the extra information that we can use rather, in order to predict have a more specific prediction of the future. So without further ado, let's get started on what do candlesticks actually mean and how to start reading candlesticks. So a candlestick consists of 3 parts, all right guys? Now, another thing that I want you guys to be doing while I give these lessons is to make sure you guys have a pen and paper with you and you're taking down notes, okay guys? Because this is something that you guys need to be going over and you guys need to be learning, right? And learning isn't just kind of entertainment, right? And just watching a video, maybe unless you're some super genius, like I said, some super sponge where you're just like absorb, right? Other than that, I would really like you guys to have a pen and paper with you where you're taking notes, maybe drawing some diagrams, right? And listen guys, the diagrams that I drew for myself, I don't really have my notebook that I started like freaking 7-8 years ago. I don't have it with me around. I should, I have it around, but I don't have it like here with me. And listen guys, these doodles, they don't need to be perfect, all right? And we're not here freaking drawing Picasso drawings, all right? We're drawing squares and lines, okay, or rectangles and lines. So it's really nothing that serious, but it's good for you guys. It's a good practice, and it will kind of solidify the patterns and etc. in your mind. So without further ado, let's get talking about candlesticks and what they consist of. Okay, so like I was saying, candlesticks consist of 3 parts. 2 wicks, right, aka 2 tails, if you want to call them that, and 1 body, right? And candlesticks, like I was saying earlier, they give us 4 pieces of information. They give us the high, they give us the open, they give us the high, they give us the low, and they give us the close. Now, how does this work? Okay, so let's say this is a, for example, let's say this is a 1-day candle, right? This candle represents 1 day in the stock of Tesla, for example, okay? And At 9 a.m., guys, Elon Musk, or at 10 a.m., at 10 a.m. or at 9:30 when the candle opens, right? Because that's when the market opens, right? At 9:30 when the candle opens, the Elon Musk tweets saying Tesla just made a deal with the United States and they're going to make $1 billion, right? So what happens? What happens over here, right? At the open? Well, the stock jumps way up, guys, because $1 billion, or not a billion, I don't know, what would Tesla like? What would be good for Tesla? $1 trillion. I don't freaking know. I'm just saying some good news, right? Elon Musk tweets, some good news came out regarding Tesla, guys. Massive news. Tesla people are so happy. Tesla investors are so happy. They buy, 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 buy. And then from open, right, that we got over here, the stock jumps all the way up to a high of, for example, let's say this is what, $100. It opens at $100 and it runs all the way up to a high of $200, right? So the stock doubles in 5 minutes, right? Now, mind you, this is the daily chart, okay? So we don't necessarily see the 5 minute chart, right? Because if it was the 5 minute chart, then the close would be at $100 or $200. But right now, this is the daily chart, okay? So it shows everything that's happened previously. So Elon Musk comes out and says Tesla made $1 trillion deal. Okay, the stock jumps from $100 all the way up to $200. But then, do you know what Elon Musk does? He says, psych. I was just kidding, guys. And then people are like, what the hell, Elon? What are you doing? What? It is a joke to you? Our money's a joke to you? Blah, blah, blah. So then they sell from $200, right? From $200, and the stock falls from $200 that it was at all the way up there, right? It drops down to a low of $75. Okay, as you guys can see, here's the low, right? And it hits the low of $75 at, let's say, 12 o'clock. Okay, and then Elon Musk tweets again and he says, sorry guys, I was hacked. It was actually not a joke when I said psych. So what happens? Well, by the end of the day, the stock makes a recovery back to what would this be? $175. Okay, $175, and it closes at this level. Okay, it closes at this level. Hence, why we get the green body, because it went from open at $100 all the way up to $175 now, right? So we get that green chunk that it covered, that the stock covered, right? The price covered from $100 to $175. But however, we still get the tail from 75, right? Because it did hit 75 even though it's empty, right? So it's empty from 75 to 100 because that's how much it gapped up, right? It went down there, but however, it didn't remain down there, okay? It went back up again, and it went past the open again, and it went to the close, right? And we also get the tail, right? We also get the wick at the top because that's how high it went. That's the most high it went in the day. In the one day, that is the most high it went. So by just looking at this chart, right? By just looking at this candle, we can tell, if we didn't know what Elon Musk said or anything, we would go, dude, Tesla had a crazy day. It ran up from $100 all the way up to $200, and then it went from $200 to $75, and then went from $75 to $175 again. Now, it's hard to tell when this happened, right? The what do you call it? What is the word I'm looking for? The order of events is hard to put together, right? Other than the close and the open. Other than the open and close, rather, right? Because we know that it opened at the beginning of the day and it closed at the end of the day. But when did it reach the high? When did it reach the low? Did it first hit the low and then hit the high, or did it first hit the high and the low? But this doesn't necessarily matter. So why doesn't it matter? Well, the truth is, guys, because all we're looking for is a sign that where can the stock go next? And if the stock has made a high of $200, then we know that a high of $200 is once again possible, right? It is a possibility, considering that the stock did it before, it can do it again, right? And if it made a low of $75, then we know that it's possible for the stock to make a low of $75 once again in the future, right? Considering the candle, even though it didn't close there, we know that it could potentially, if there's a red day or something, it can potentially get back to that $75 level, right? or if tomorrow is a great green day, then it can reach the $200 level, and it can potentially even break past that $200 level. Right now we're at $175, right guys? So that's the kind of information that we kind of want to see from these candles. Okay, so it has done that, so that means it can do it again. Not that it will necessarily, but that it can, right? Compared to a line chart where we just get lines, where we just only get to see the close, right? Where we don't necessarily know where can the next candle even go? Where is the possibility of the next candle going, right? And then in the next lesson, guys, we're going to be talking about, this lesson isn't done yet, but I'm just giving you guys a heads up that in the next lesson, we're going to be talking about candlestick patterns, right? Candlestick patterns and how to predict what will the next candlestick look like considering the previous candlesticks patterns, right, guys? But for now, let's get talking about the red candlestick, right? Because the red candlestick and the green candlestick are somewhat different considering the open and close are flipped, okay? So in a green candlestick, as you guys see, the open is in the bottom, right? And the close is on top because it's green, because the stock went up. Now, on the other hand, in a red candlestick, the open is on top and the close is in the bottom, right? The close is in the bottom because the stock went down, right? It closed down. It opened high and it closed down. That's why it's red. Red is not good, okay? The newsflash, red is not good, okay? But however, the low and the high remain the same. So for example, another scenario for Tesla, right? Let's say Elon Musk comes out, the same scenario, right? So Elon Musk comes out and says, guys, Tesla's making a gazillion dollars, right? The next day. He says that the next day, right? And then the stock jumps from, let's say, $175, right? At open, it jumps to $200, right? A high. It hits the high once more. It hits $200 again. But then Elon Musk comes out and says, psych, but this time for real, okay? So this is not a joke. It's for real. So then everybody sells this stock. Everybody sells this stock and they're like, oh my God, screw Elon Musk. He's a liar. He lied to us. Blah, 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 blah. He lied. Why would he lie to us? He's a liar, right? Now the internet's trending. Twitter's trending. Elon Musk lied. Elon's a liar. Elon lied. Hashtag Elon lied. Blah, 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 whatever. So then the stock jumps from the $200 level that it was at the highs all the way down to $75, right? Which is the low, right? The low is $75. And this happens, let's say at when? Like 12 o'clock. At 12 o'clock, it's at $75. But then people kind of get together and they're like, dude, it doesn't really matter. I mean, we weren't really even expecting this freaking deal to even happen. So we were excited and we did push the price up all the way to $200. But I mean, the stock was at 175 before all this. So why don't we go and buy some more, right? Why don't we go buy some, considering that now Tesla is on discount, right? I mean, it was at $175 in the morning and now it's at $75. So what do people do? The people go and buy some Tesla stocks, causes the stock to go from $75 to $100, okay? And that's where we get to the close, right? The close at $100. Now, does that make sense to you guys? I hope that makes sense. I hope my analogies weren't too crazy for you guys, right? And I hope they kind of made sense and they made it easier for you guys to understand. Now, if you guys have any question and you guys are part of the Patreon, make sure to understand that you guys can reach out to me one-on-one and we can discuss the candlestick patterns and etc. And we can talk and I can explain to you guys one-on-one through Patreon what I'm talking about and give you guys some more examples if it's not clear and etc. With that being said, guys, this was the first lesson. In the next week's lesson, guys, we're going to be talking about the candlestick patterns and how to predict the next candlestick and what the next candlestick will look like considering the previous candlesticks. Thank you for watching, guys. Happy investing. Money talk.